two types of income. There's active and passive. Passive income is an income you can have without working, whilst an active income is something you need to work to get paid for. Normally, when you start, you do always active income, because to make passive income, you need starting money. It's like investing. So, for example, here is an example. If you're a business owner or an investor, well, then you don't need to continuously actively work to get money. Whilst if you are working for a company, you need to work. In active income, you work for income. Involvement is needed because you work. Then you probably have a schedule when you are working for a company, for example. There's less risk. Yes, there's less risk because if you're an employee, for example, you need to get paid. It's not like a bank. If you own a company which can go bankrupt, then you don't need any starting money and you probably have some steady income if you work steadily. Passive income is the money practically works for you, although that isn't true. It's practically other people who work more, and that makes an average. So then there's you're more free for a schedule you make. Then because if you're not an employee, but then you can have Saturdays. So you could work on Sunday and have free Saturdays if you want to do that, for example. They actually don't need to work. So there's more risk in passive income, but it mostly depends on what you choose. If you choose crypto, well, then that is pretty risky, but it could have more reward. Stocks are slightly less risky and slightly less reward. Passive income is passive income really passive? So here's an example. If you're a YouTuber, some may consider that as a passive income, because if you don't upload videos for a bit, you would still be making money. Of course, if you stop for a really long time, well, then you won't be making so much money. It's also more active at the beginning, and you probably need to make lots of research to do it. But on the long term, it could be. Here are some examples. So, passive income. So you got stocks, which can have dividends, or you can have it stocks go up and buy low and sell high. Then you got compound interest. So this would be interests in a bank, or that this is not passive income, but you could do that. You just put continuous money away in a jar, and that would grow. Then there's the royalties. So if you have a patented something, well, then you can kind of sell it. So if a company is producing that patented thing, well, then every product sold, it has to pay you 50%, maybe not that much, but some percentage. Then there's YouTube, as I was saying before. You can put ads, and you could do candidate ads, and you get paid from the companies which make ads. Here are other examples. So there are rates, which are real estate investment trusts. Then there's affiliate MKTGs, when you provide other products on your blog or website or YouTube channel and receive commissions. Here are other ones. So there's cashback, which is when you receive interest from companies, or occasionally from governments on your purchases. Although this would not really be income, because you need to buy something to have less percentage. So you cannot make money buying stuff. Then there are paid online micro tasks, which are watching YouTube videos or playing games. For example, you could be testing a game. So for example, let's say that there's a new company making a new game, which we can name, I don't know, B. And so you could make money testing this game B and like making YouTube videos about it, so that you would have doubled income from YouTube and from the company which pays you to test this. Now, here are some risks. So low risk assets have liquidity availability. Then normally, if you have to choose which one, it is also depending on your risk tolerance. Like, if you are a person who's like, I don't know, poor, well, then putting $100 in something risky is not a good idea. If you're rich, well, then that might be a good idea, because you've got lots of money. So even if you're very rich, for example, even if you invest 99% of your money, you would lose all of it, you would still probably have enough to live. So high risks or high risk things could be like stocks, cryptocurrencies, high yield bonds, and other things which could give you a high reward, but also they come at a high price of being risky. Here are some helpful tips. So diversify. This is both a good thing and a bad thing, depending on who you are, because this makes your possible reward lower and your risk lower. For example, let's say that you pick 10 stocks. If you pick one instead of 10, there's a lower probability of one stock being good than one stock of 10 stocks being good. So that could be a good thing, but also if there's a stock which is, for example, really good and you're pretty sure that it will go up, if you put other stocks which, let's say, stay at the same price, well, then you make an average, and it wouldn't be worse, but you wouldn't have such a high reward. So it's just making your reward lower, possible reward, and your risk lower. So it's like making everything lower, a shot. So then here are just some strange things. So here are some strange terms in investing. So we kind of put this for fun, but it's interesting how there's a dead cat patent. So there are some strange things. So we said some bull and bear markets, which are pretty common. Then pigs get slaughtered, whales, which is normally big, rabbits jump around, turtles slow to buy and sell, dead cat bands, bottom fisher, dogs of the dives, zombies, suicidal, sleeping beauty, gunslinger, elephants, cats and dogs all goes up, category killer, Goldilocks economy. There are many strange things. So here's kind of the conclusion. So step 1 is earn. You need to earn always if you want to invest. Now, then you need to save, although you need to earn and save at the same time. And then you can invest some of your saved money in some things which you can hope will go up and make you more money. So this revenue model. So if you do passive income, assets work for you, and kind of money generates income for you. So that's actually other people which kind of work for you. And well, thank you for listening. Does anybody have any questions?
Matia, go ahead.
About the passive income, I was just wondering, you said something about the dividends. Do all stocks pay dividends?
No, some stocks pay dividends, but not all stocks pay dividends.
Very good. Good job, Ettore. I was going to answer that question. Yes, not you're absolutely correct. Not all stocks pay dividends, and we will learn more about preferred stock and common stock, and which pays dividends and which ones are bought for the purpose of owing part of the business and decision making, and for just the purposes of buying and selling. So we will all learn about that when we're going to do a whole lesson on stocks. But good job, Ettore, for knowing that. Any other questions? You did a wonderful job. Thank you so much. I really appreciate it. Very detailed.
I also wanted to say, technically, this would not be financial advice because, like this, if you do something I said and you would lose all of your money, it's not my fault, okay?
For educational purposes only, of course. Thank you for stating that. That's what the class is for us to learn. So one thing I would like to add to Ettore's presentation is the idea of active income is wonderful if a person really enjoys what they're doing. But if we're talking a person is going to the job every single day for years and years, 5, 10, 15, 20 years, and they don't like the thing that they do, active job can be very stressful. So in those cases, looking for sources of passive income could be even advised for a well-being, a person's well-being, a mental well-being. So not only as a supplementary or a primary source of income. The person doesn't have to choose it's one or the other, it's active or passive. There's always a person can always find a good combination. excuse me, a good combination between a job that they like to do, active job, as in getting up in the morning, going to work, meeting their co-workers, having a schedule, staying active and involved in the workplace, everything that Ettore mentioned when it comes to active job, and still receive a passive income on the side to finance maybe other hobbies or more lavish lifestyle. So it doesn't have to be one or another.